Alright guys, Genji Retro here, and today we got that substantial portfolio update video, and we also got a concept idea I want you guys to actually listen to. This is about competition being Roundhill. Roundhill made a very important update on Twitter, pretty much hoping that they make a fund of funds called Rmax that is the optimized version of ymax. But first off, looking at our portfolio, big changes guys. As you can see, it's at $174,000 in value. We had excess liquidity and we were able to inject $44,000 into this account. So currently at $174,000. And to be quite frank, we got $44,000 injected. We're probably going to leverage that completely to the max. So we're going to use $44,000 in equity, $44,000 in margin. It is what it is. We can look at the buffer. It's at 54%. Margin use went down to $62,000. The margin total that we can use is $115,000. We're essentially about 25-26% leverage right now, and I'm not gonna lie guys, eventually given enough time we're gonna go back, and actually pretty soon we're probably gonna go back to 80% margin leverage. It is what it is. Some people say my portfolio is gonna get blown up, and you know, we'll find out pretty soon, but that's the plan essentially. We've been nibbling slowly with our excess money, and you know, portfolio has been going up slowly. I'm gonna show you guys the plan, and the plan is in the spreadsheet. But first off, looking at metrics here, we've been paid $19,000 in distribution so far. Currently, we are towards break even on our $117,000 initial investment. We're 16.54% there, so we're almost a fifth towards break even on this money. Although we did just inject $44,000, so the break even on that is currently at 0%. The problem with my spreadsheet is as you add more money into the account, basically it becomes more inaccurate. I'll show you guys on total return, for example, because for example, on the cost, right? Currently we paid $5,500 to buy XDTE. Now, if we buy another $5,000 into XDTE, you can see total return turns negative, and this information is inaccurate. I'm not gonna lie, man, I might just say screw it and just go the Oracle route and just make a Word document for tracking my information, because spreadsheets, I hate spreadsheets, and this is just another can of worms that I gotta deal with that I will do eventually. At the very least, we are gonna, you know, this is accurate right here, tracking our dividends. We're gonna keep that accurate, obviously, and the amount we paid, we're gonna keep that accurate also. We can go over to the distributions tracker, which is also inaccurate, except for tracking the numbers accurately, but some months pay 4 and some months pay 5 times, and this is making my tracker inaccurate because there's only 4 columns in each row. So the next plan was to reconfigure 5 columns, column 1, 2, 3, 4, and if it pays 5 times that month, that 5th distribution goes here. Then you got your monthly tab, and then you got this monthly income tab. It comes to this column. This would make the distributions tracker more accurate. Plan is inside the theoreticals tab. So essentially everything here is what we're gonna buy in the future. You can see ymax right here, and let's say we spend another $10,000, so we're at $20,000. If you spend $20,000, this should drop by 10,000, and it does. So essentially the more I buy this value, which was originally $44,000, it'll drop as we buy more here. So the plan is we are trying to buy more stable funds, so there's less NAV erosion, because personally, again, every investor is different, and I have my high yield funds and yieldmax already, but I want to branch out so there's less NAV erosion, and so we're investing into more stabler funds. I'm not saying we're going away from yieldmax. We will eventually, but for now, yieldmax. We're buying ymax, and flip TSLP from Curve, AIPI, this is new, and XDTE. So that whole $44,000 and possibly $44,000 in margin is all going into these funds right here. And the caveat is obviously Roundhill is releasing these funds soon. Not these specific funds, but their individual stocks soon. And we are going to try getting those in the future. So we might be able to buy some with the $44,000. Not within the first month though, because on the first month, the margin on Robinhood is 100%. So we can't buy those for at least 1 month. But yeah guys, we spent $14,000 so far. Distributions have went up $111 per week, and for the monthly we're up $447 in monthly distributions. Unfortunately, we couldn't put $44,000 into msty. We just can't get more heavy in crypto and heavy in a single stock, and you know, we gotta do this for the longevity of things to be more diversified and whatnot. So we are investing into these funds for now. All right, guys, so we got our portfolio update out of the way, which was very substantial. And the next thing is Roundhill. Next week, we're launching our 5 first weekly pay ETFs designed to pay weekly income distributions while targeting amplified weekly returns linked to high growth stocks. I had someone in my Discord say weekly because they might mean staggered, like 2 pays on Monday, 2 pays on week 1, like yieldmax, 2 pays on week 1, 2 pays on week 2, 3, and 4, and quote unquote, they're paying weekly. But no, if these funds actually pay weekly for individual stocks, that would be crazy. So this is the update on Roundhill. But my second point is I'm trying to push this concept right here. It's called Rmax, Rmax. It's essentially going to be a modified and also optimized version of ymax. I really hope you guys listen to this part of the video and spread it if you have the same belief as I do. All right, we can go to my Discord. This is where I typed everything at. Hopefully you guys join my community Discord because this is where you can catch me, and this is a place where I want to just group all of us fellow investors together so we can grow together, because no one wants to invest alone. Who wants to grow alone? It's more fun to do things as a community. Link to the Discord will be in the description. And we will not judge you on your investing method, whether it's, you know, trading, options, whether you believe in NAV erosion or just total return. We won't judge you. We accept everyone, basically. Even people like you, Oracle, if you're watching this, because a lot of people don't like you, but we will take you in. I got no grudge against you or anything. Alright, so listen carefully. ymax is a monster, assuming it had a boot function that kicked low performing fruit, and do not bring up 5e or feet because those aren't diversified enough. Those are like what, 5 stocks per fund? So it's not diversified enough. The problem is ymax brings every new fund into ymax, but it does not have a function to take things out of it. Let's take a look from Murney, and the testimonial is from literally Jay's mouth.
A little bit of the diversification that you get from those, but would I prefer that we're not adding more MRNY to ymax? Yep, that stock is a falling knife. I wish we didn't have to keep it in there, but it's still in there, right? We don't have the discretion, according to the prospectus, to take it out. Now, can we file to change that? Yep. Wouldn't be the first time we change the prospectus, but for now, they're all in there.
So this is my problem. Even Jay from the fund manager's mouth, he said that he really doesn't like Murney. He thinks it's a falling knife and he doesn't want to buy more of it. So why hasn't the prospectus been changed? Because you literally just said you can change the prospectus. It's been changed before, but we're just going to let Murney sit in there. And that's a problem, in my opinion. There's action that can be done, but it's not being done. And this is hurting my returns on my investment. Solution: a prospectus change to remove stocks based on specific situations or metrics. And in my opinion, because they add funds so often that they have the room to remove 1 to 2 of the worst performing stocks of each schedule just to condense ymax. And there's literally 2 things that can happen. Either they change their prospectus or we hope for competition. That competition is looking like Roundhill right now. In comes competition. You got Roundhill, you got Curve for now. Rmax, Rmag, Kmax, Kmag. Curve has the individual funds currently, and they have the ability to make a fund of funds. Roundhill is just making the individual stock funds soon, which pretty soon after that they can make their own fund of funds also. So realistically, it's a matter of time before they do it. I don't see why not. Making a fund of funds of all of their individual funds. Pay very close attention to this stuff right here, guys. This is the concept. So Rmax, the optimized ymax. 1, lower expense ratio than ymax. Some people like to do comparisons between different stocks and different ETFs. They'll look at everything from, you know, income distribution, expense ratio. So those people, some people are going to say, well, fund A has a 1% expense ratio, fund B has an expense ratio of 0.5, so fund B is probably better. I'm gonna buy into fund B. You got those people who weighs the pros and the cons like that, and so for those people, if you give Rmax a lower expense ratio, it's going to entice those investors. Number 2, the ability to boot trash out of funds, whether based on metrics or criteria. I can't judge those criteria and metrics. Roundhill has to do that. Because Roundhill does not launch funds left and right like, you know, yieldmax does, I don't see this being a problem for now. It's still good to have a feature where you can boot things out of it from the very start. Aim for 20 to 25% yield. If ymax can hold steady since going weekly with a 40% yield, then Roundhill can hold it flat ideally. Yes, ymax is down in price, but previously it's due to, it has to be attributed to market conditions, so you can't solely blame it on ymax. It all started in December with the Jerome Powell incident, and in my opinion, we know that ymax was flat on the chart when it started going weekly, and then everything was good until December. So if it's able to stay stable like that when the market's a-okay, then ideally Roundhill should be able to keep their chart flat also at 20 to 25% yield, because you're paying less than ymax. 20 to 25%, because this would entice the margin crew and make it super appealing to use margin. Lower yield leaves room to save extra profits, if there is any, for down weeks in the future or for the end of the year, so you can pay those extra big distributions like XDT did in 2024. At the very end of the year, XDT paid like 60-cent distributions instead of the normal 18-cent distribution. So, with extra profits in Rmax, at the end of the year, pay those super big distributions. So even though it's paying a 20 to 25% distribution, very end of the year, you could see some big distributions that may bump it up to 30%, for example. In my opinion, for these income funds, I don't want the NAV to appreciate. I just want it to stay capital flat, the chart to stay flat. Now, this is a very interesting one, and this is a theoretical right here. It would be very interesting if they can have a dynamic yield where they can drop the yield to the 17% range if it means they can have a period of share price appreciation right after a down market, just to get back to its target, inception price of probably $50 a share. This is me daydreaming, basically. It's trading at $50 per share like XDTE is, and then the market goes down, so Rmax is at $40 per share. At this point, they lower the yield from 20%, 25% down to about 17%. So they are able to preserve more of the NAV every week. Price starts going back up to about the $50 mark, and then you start paying your 20 to 25% distributions again. Again, that's a dynamic yield. That's probably complicated. I'm just throwing the idea out, guys, and there's nothing wrong with throwing ideas out like that. But it would be pretty neat though if it were possible. I just realized I forgot one very important thing. Rmax needs to pay on a day other than Friday. Everything pays on Friday. If you pay on a Wednesday, this would be so good. Think about the yieldmax people. A lot of people want to get paid daily now because you got your weekly pay, so let's do daily. An actual daily fund is probably not possible. If your company competes with another company and it pays on a day other than Friday, which yieldmax does, your biggest competitor, people from yieldmax are likely going to buy into Rmax. Some people want to use the velocity of money. So if you get paid on Wednesday, think about it. Payday is for Rmax is on Wednesday. You get your distribution. Yieldmax X day normally is on Thursday. So you use the distributions from Rmax to buy into funds inside of Yieldmax if you like Yieldmax. And then you get paid from Yieldmax on Friday, and then you can buy into other funds on Monday. So this is just making your money travel faster. The faster you're able to invest your money into something else and move it, the quicker you can compound your money. So a lot of people are gonna like Rmax if it does come out, but if it pays on a day other than Friday, they can do Thursday, but ideally it's best if they do on something like Wednesday. And to make a point on Curve, if Rmax comes out and pays on Wednesday, Curve has to pay on something like Monday to entice those investors, because then you got people getting paid on Monday investing into Rmax, then investing into ymax. Now you're getting paid 3 days. Now these competitors, they're getting paid 3 days. But yeah, this isn't about Curve. This is mainly about Roundhill and Rmax. I really want this idea to spread. If you guys made it this far and you agree with me, then for one, hopefully you guys join my Discord. And for two, screenshot this or take my ideas like a lower expense ratio, the ability to throw things out of the fund if it has bad metrics, target 20% yield, 25% yield, and paying weekly but on a day other than Friday. If you believe in this stuff, hopefully you guys can share my video and take a screenshot and share this. And right here, the next time they post something, take a picture of my stuff, my Discord, and just make a post and be like, can you guys look into this? A fund of funds called Rmax or something, where you guys got point A expense ratio, point B pays weekly but not on Friday, on something like Wednesday or Monday or something like that. Again, guys, we're all trying to make money here. You know, I might be asking for too much, but we're all making money here. We're trying to park our money somewhere to get a yield, to get income. I'm not the bad guy here. I am rooting for competition because competition is going to make these companies make better product. A better product means your money works harder for you. So this is beneficial to you if you guys do this stuff. So hopefully you guys share this video, document, you know, other YouTubers, ask them if they can pitch the idea of a Roundhill fund of funds with those metrics. It doesn't hurt to try. And if it does work out, if it does happen, then guess what? You got yourself possibly one of the best funds out there. All right, if you guys made it this far, then thanks for watching and see you next time.